I'm Sarah Benwell, the editor of fundoperators.com, and I'm here with Mohsin Qadir, Mezzanine Fund Finance Lead at ICG PLC. Mohsin is speaking at the Fund Operators Summit later this year, and ahead of that, we wanted to catch up with him to get a little bit of a taster of what he's going to be talking about. Hi, and thank you for joining me.
Thanks, Sarah, for having me.
So my first question is, what are some of the challenges that are facing fund operators who want to remain competitive in the current market?
Thanks, Sarah. So very interesting question. So coming from a privately held assets world where everything is opaque, slow, and it's kind of a black box. So and from a fund operator's perspective, so I would think of the challenges being underlying technology, but then I would think of it in two senses, in which where we deal with our stakeholders. So one being our investor side, private assets, as you all know, so it's very opaque, very private, and known for the lack of information that's available, the lack of disclosures, and that's how the industry was set up, to lower the costs, because our investors are sophisticated. They don't need such disclosures as you would expect. But what challenges that we now see in this space from the investor perspective, as well as regulatory requirements, is that the requirements and the frequency of reporting, the detail and breakdowns of the data that our investors ask, their sophistication, the pension funds of the North American markets or the sovereign wealth funds. So the demand and ask keeps on increasing. What that means is it faces two-way challenge in terms of having the right technology, the right partners, and the right tools to be able to tailor to that. And that's what I think a number of industry participants currently coming from the legacy systems are faced with challenge. And that's something which is very important to look at. The other side of the aspect or the stakeholders that we deal with is our portfolio companies. And a key job or function of ours is monitoring of the portfolio performance. And in this, again, the complexity of the variety of data. So as investment managers become more global, the jurisdictions, the geographies, the industries in which we invest is blurring and becoming global. And our systems, again, are strained to be able to cope with such diverse set of data. And again, the frequency is increasing, especially in the remit of ESG coming in. So it's not just financial data, but also the non-financial aspects. And then how do you standardize that data? How do you validate that data? So all these things are coming up. But I think under the underlying theme of all of this is technology, which is where we are faced with, I would say, an existential crisis, and the key point to think about.
Lovely. And are there any kind of current or future trends that are perhaps making some of these challenges that you've just outlined even harder?
That is correct. Yeah. I think in this, what we have faced with technology is the underlying trend that's what we call outsourcing of the non-value add services. And unfortunately, or fortunately, however the industry has played out, the fund finance functions, so a number of them being accounting, oversight of the portfolio, fund administration. So that's all been growing towards outsourcing to specialist vendors. So the benefit of that is that we get very specialized service providers in the industry who know what they're doing, who have the resources and the scale to be able to focus and invest in those systems. But then again, so the downside of this is the loss of control from the fund finance perspective, because you are at some point also give away your strategy, your control in terms of what you want that to be in future. So again, over here, there's a delicate balance, and there's no right or wrong answer, but finding the right optimum mix that works for the industry, for your business. I think that's the key point.
And now, obviously, I don't expect you to have all the answers because nobody does, but perhaps can you think about or explore some of the strategies that maybe fund operators could use to try and overcome some of these challenges that you've so eloquently kind of outlined?
I think in this, again, so the finding the right balance, I would continue with my earlier response, is the optimum solution. So, for example, in the ESG emerging landscape, that's something which wasn't there as a specialty or in-house functions within the business. But then again, so there are very good firms in the industry who provide very bespoke, tailored, and very insightful reporting systems. But then also the balance of that is that how do you integrate those systems with your own internal reporting systems? And I think in this, again, so it is trying to find the right optimum mix of partners, and are those partners the strategic long-term buy-ins from them? So if they have that, and similarly also we need the key buy-ins from the very top of our business as well. So so that there are the right sign-offs in terms of the technology budgets, the finance team budgets, and again, and having the right sort of planning for the, not just for the immediate short-term challenges, but having a more holistic step away kind of thought process into this.
Lovely. And then last one from me, do you have any thoughts on how perhaps fund operators can start thinking about improving their operational expenditures?
Sure. So for me, I wouldn't, I'm biased being a fund operator, so I wouldn't like to call it operational expenditures, but I would like to think about ways how the fund operators can add operational value into the business, and just stemming from the earlier question as well. So I think in this, the key buy-in is not just the fund operators trying to steer the business, but also buy-in from the very top, the exco. And because from my perspective, I think the operational value isn't just reducing the expenses from X minus Y over a period of time, but I think it's more the strategic choices that we make and the right investments we make, and be it expensive at the short end, but I think in the long run that really makes sense. So I think in the key example or any discussion nowadays can't happen without blockchain, and this, especially as I mentioned earlier, the privately held assets, so they're all opaque. There's a number of jurisdictions and dozens of advisors who make bread with this industry, and due to the nature of this. But imagine the CFO's life in a blockchain world where they don't even have to sign off any vendor due diligence contracts or tax due diligence or even investment performance monitoring, because then all of this data is all out there on the blockchain. And so it's a very controversial idea and not great for a number of advisors in the industry. But I think that, again, is a key trend that is happening. But then how we need to think is right from the top, that how, as the asset managers and the fund operators within this business, then how are we aligning ourselves into this new world and reality?
Lovely, thank you. Well, obviously, we'll be discussing these issues in more depth, as well as a whole load of other operational challenges and trends at the conference later this year. And I can't wait to hear more from you then. Thank you so much for joining me.
Likewise. Thanks, Sarah. Looking forward to speaking with and seeing you all then.